Hello and welcome to the look ahead for Wednesday, the 6th of March, with me, Fiona Cincotta, Senior Market Analyst at City Index. So there is a lot to be watching tomorrow. I think we'll just kick off with the Eurozone retail sales, probably the least important of all the events which is going on tomorrow. Retail sales are expected to rise just modestly, 0.1%, after falling 1.1% previously. Now, the data comes after we've seen mixed data really from the Eurozone. Today, we saw the services PMI actually upwardly revised to 50.2, which is a marked improvement from the previous 48.4. So, we've seen services move into expansionary territory. Last week, we saw another contraction in manufacturing. So the data, as I said, is pointing to a relatively mixed performance in the Eurozone economy. Comes just days ahead of the ECB rate decision on Thursday. The figures aren't likely to be very market moving. I mean, if we just have a look at what's been going on in the euro US dollar, euro US dollar is more likely to be impacted by the US dollar tomorrow, given what we've got going on in the US. But as we can see, euro is actually just picking up there. It's pushed above that 108.60 resistance that we've been watching all week, heading now towards 109. That'll be the next level. That's the February high. If we can get a break above there, going to be looking for 1010. The RSI is supportive. That's going to be keeping buyers hopeful of further upside as well. On the downside, I mean, as far as support's going, 200 SMA, that's the one that we've been watching quite a lot around the 108.30 level. And then you've also got the February lows, the lows of last week to be watching around that 108 level. So then moving on to the next big event tomorrow is going to be the Chancellor of the UK, Jeremy Hunt. He will be unveiling his spring budget. Now, there's been a lot of focus on this budget. It comes at a time when the Conservatives are in a very weak position as far as the polls are concerned. This is ahead of a potential election, potentially in later this year. So Jeremy Hunt's going to really need to try and strike a balance between sort of wooing voters, but not going so far that it actually scares the pound. We're not expecting a repeat performance of what we saw from the Liz Truss budget 18 months ago, which saw the pound drop to a record low versus the US dollar. But Jeremy Hunt's going to be walking a very fine line between tax giveaways and a tight public finances. So there have been some sort of concerns or some comments about what he might be doing. Income tax cuts was something that he'd been considering, but we've also heard from him that he's not going to be giving sort of massive tax giveaways, and that's understandable given that inflation is still 4%, which is double the Bank of England's 2% target. So he doesn't want to be doing anything big that's going to be causing inflationary pressures to build. So between income tax cuts, which have been suggested, or the national insurance tax cuts, it does appear that he may be heading towards the cut in national insurance. That is considered to be a less inflationary way of cutting taxes. It just applies to those who are working and not also pensioners. So that's going to be the main focus for the pound as well. Obviously, depending on what he does, how big the moves are that he makes, pound's going to be clearly focused that anything that does happen is going to be a funded move rather than unfunded tax cuts, which is what sent the pound tumbling in the Liz Truss budget. So that's going to be a focus. Let's just have a look at what the pound has been doing. Sterling US dollar has actually just broken out of this symmetrical triangle that it's been trading in. It's pushed above that 127 level, heading now towards 127.90. That's what the bulls are going to be looking for. It's to try and break out of this range that it's also been trading in. So on the downside, we're going to be looking for some support around the 126 level. That will be the one to watch as far as sellers are concerned. What else we got going on? Also got the Federal Reserve Chair Jerome Powell's going to be speaking. Now, he will be speaking at a 2-day testimony. It's a biannual testimony before Congress, where he's very much expected to discuss central bank policy and where all the outlook for interest rates and inflation and growth. We're expecting Jerome Powell really to reiterate his position that the Federal Reserve will need to see more evidence before it starts to cut interest rates. We know that obviously core PCE, we saw that it did cool when we had the data the other week, which is good. It's in line with what the Federal Reserve will be expecting, but it's still well off that 2% target that the Fed is aiming for. I think he'll probably stick to a slightly more hawkish bias. We just had Atlanta Fed President Raphael Bostic today mentioning that there was no urgency to cut interest rates in the US given the strength of the US economy. And I think, there's also that data on Friday. We've got the US non-farm payrolls coming out on Friday, which is expected to highlight the ongoing resilience of the US labor market. We've also got ADP private payroll data tomorrow, which again is expected to come in at 150,000, up from 107,000. So still pretty robust numbers. So there's nothing really that Jerome Powell's going to be looking at the moment that's going to be screaming to him that he needs to start cutting rates. Currently, the market is pricing in that the Fed will start to cut rates in June. This is going to be interesting because obviously if we hear a very hawkish Powell and those expectations get pushed back further, then that could be a boost for the US dollar and could pull stocks lower. But the one we're going to be looking at just now is actually gold. So gold has shot higher. It's closed above 2100. Yesterday it closed above that level for the first time ever. It's heading towards its all-time high. But it's really interesting, this move that we're seeing in gold, because it's happening. Usually you'd expect this sort of move in gold to happen because the US dollar is weakening considerably or because the yields are falling. But we're not seeing either of those. So, I think there is a couple of things that's probably going on here. Central banks probably buying up gold, and that's filtering through. But also I think perhaps the traders are focused here on the fact that the Federal Reserve at some point this year, later, potentially June, will be cutting interest rates. And that's what's helping the precious metal higher. Just watch though on that chart that it's severely overbought. So we could see some consolidation or a pullback in this level. As far as support is concerned, minor support 2100. But I think the major support there we're seeing at around 2085. That was the December high. A break below there is going to perhaps see sellers pick up the pace. As far as the upside is concerned, buyers are going to be looking to go for that 2150 level, the previous all-time high, a push beyond there to reach new record levels. And finally, the other one that we're watching, I did warn you that it was going to be a busy day, will be the Bank of Canada. So Bank of Canada will be releasing its interest rate decision. We're expected to leave interest rates at 5% for a fifth straight month. Now, the latest CPI data from Canada might sort of push the decision or shift the stance slightly of the Bank of Canada towards a slightly more dovish stance. But this is one piece of data, so I doubt it's actually going to have that much of an impact. In fact, I think the meeting will probably be fairly standard. The market's going to be looking for hints and tips and clues as to when the Bank of Canada might start to cut interest rates, and the Bank of Canada may not be giving them. The market sees that the Bank of Canada is going to start cutting rates around June. So if we get any comment statements that either support or will push that that date back further, that is what's going to move the loonie. But as I said, between the US dollar CAD, I think it's probably again going to be the US dollar which moves the pair more than the loonie, more than the CAD. So as far as levels to be watching, I mean, we can see here this pair has had a really solid run up across 2024. It's just really struggled to push above that 136 level. That's the weekly high, last week's high. If we can get a rise above 136, then we'll be looking at that 136.25 level, which is the December 2023 high. And beyond there, be looking at 137. On the downside, I think support can be seen there at 135.40. That's the 100 SMA. And that's also the weekly last week's low that we'll be looking at, as well as the rising trend line support. So if we get a break below that, that will bring the 200 SMA into focus. So thank you very much for watching. Like I said, loads to be getting on with there. If you liked what you've seen, then please do give me a like or the film. And if you would like to receive more of these videos, then please do press follow.